It looks like it will be a decent opening, but after yesterday's breakout, we're once again going to open right in that zone. 10,900 to 950 is where the market has struggled about 8 or 9 times. Would be 10 time lucky, or again, just the basic texture of market will be respected, which is that there's a bit of a halt around that 10,900 mark. We'll find out. The opening is about 10,900. 10,902 is what you have on the Nifty right now. 10,905. Let's see if it sustains about 10,900 for a certain period of time. The Bank Nifty has also opened higher today. That's also looking quite okay. That's courtesy Yes Bank, once again up about 1%. Now the Nifty is around 10,900. Let's talk about some stocks which are moving. Z Entertainment, obviously your top Nifty gainer, up 2%. Reliance is having some kind of follow-through. In fact, both Reliance and Infosys are having good follow-through. Both up 1%. And once again, it looks like these two stocks accounting for bulk of Nifty's gains. 22 points higher now on the Nifty. In fact, now building some 25 points higher on the Nifty. Indiabulls Housing is up 1%. ONGC, BPCL, Ultratech Cement, Tata Steel has gained ground, so 0.5% higher on Tata Steel. 10,915 now on the Nifty. So will be interesting if it sustains about 10,900 for a bit, because that would perhaps be quite interesting. But Infosys and Reliance clearly the ones leading the market move. On the way down, there's a bit of a profit taking in ITC, about 1/3 of 1%, not more than that, but it's okay. UPL is down about 1%. Bajaj Finance and Bajaj Finserv seeing some profit taking. HDFC is a bit soft. But really, the story of the morning is that the market's having some kind of follow through, courtesy the two large stocks, Reliance and Infosys, which really sort of batted for the bulls yesterday, and looks like continuing on that one. Sonia, what about mid-caps?
Oh yes, in fact, it's a good opening for the mid-caps as well, up about 50-odd points. The advance decline ratio is solid at 3:1 in favor of the advances. The stock of the moment on the upside is specialty restaurants, 20% up move on specialty. Volumes are also picking up on that one after a very good set of numbers. On the downside, it's KPIT Technologies that's down about 4-odd% post the disappointment in earnings. Jet Airways is also coming off a little bit, down about 1%. Some profit taking after the 15% rally that we've seen this week. And in terms of some other stocks, Gujarat Gas had a big bump up yesterday. It continues its follow through this morning. Z Entertainment, by the way, is picking up more pace now. It's almost a 4% rally that you're seeing in Z Entertainment post a good set of numbers. So the market is definitely in a mood to reward good quality earnings. Now the market is coming off just a tad bit, so it's losing some of its gains, and that is courtesy TCS, which is down almost about 1-odd%. It's been dragging. And from the HDFC twins, it's HDFC, which is just a tad bit in the red. So yes, it's trying its best to negotiate the 10,900 mark, but not so successful just yet.
No, not so successful. In fact, Sonia, the Nifty future is almost in the red. There's a, the premium has come off a bit. 10,930 on the Nifty future. So, if you're trading it, you're not getting, too much. Even the Bank Nifty future is 27,545. So not much really. And, this is, once again being led by Infosys and Reliance, two big stocks. So let's see for how long they can continue the good work. But suffice to say that once again, at least for now, seeing a bit of a hurdle around the 10,900 mark. Ashwini, what's the first trade for you looking at the market opening?
Well, if you're not long, buy calls and sit tight. I don't think you will break 10,850 very easily. Initial, early morning, the bears will come in and check out whether 10,950, etc. holds on. But once this minor dip is over, I think we should head back up. At least that's what I'm doing.
Okay. Sudarshan, on Infosys and Reliance, both are seeing some follow-on buying right now. If you had to trade either or both, would you at this point?
Oh yes, both of them. Because that is not necessarily a day trade for today, not an intraday trade. But for the next 3 or 4 days, Infosys and Reliance should see levels higher than where they are now. So they are worth buying into. For the Nifty, traders should be long. Those who are not long can wait for some kind of a consolidation or dip. I don't think today will be like yesterday.
Fair enough. The Nifty future is ever so slightly in the red now, 10,926. Mitesh, your thoughts on market opening, and is there a trade for you?
So, the market opening is very subdued, and that's what the SGX indicated. I think the trade will happen if we get close to about 10,870, where I would suggest a fresh long, or if people are already long, can add on to their long positions and keep a stop at 10,840 and look for 10,950, 970 as their first target, and beyond that, we're going to look at higher levels. So, for the time being, try to wait for any kind of intraday dips under 20-25 points from here should be a good buying opportunity. Otherwise, maintain your long positions.
All right, gentlemen, thanks a lot for joining us and taking us through the first tick. The Nifty for now is flat, but what it is doing is holding on to the gains that it's seen over the last many days. Mahesh Patil, the Co-Chief Investment Officer of Aditya Birla Sun Life AMC, joins us now to talk about all things related to the market. Mahesh, hi, good morning.
Yeah, good morning.
Happy New Year to you. Before I ask you about the markets, I wanted your thoughts on the IT sector. It had assumed leadership all of 2018, and it seems like it's doing that even now, with Infi and the way it's rallying. Your thoughts on how one should be positioned here?
Yeah, so the IT sector this year, we've seen some kind of headwind because of a global slowdown, anticipated, which is there. But overall, I think in terms of deal wins, if you look at the large IT names, has been fairly strong. So the top line growth momentum seems to be fairly strong getting into this calendar year. And some pressure on margins because we've seen cost increases, especially on the other expenses, marketing and the subcontracting cost. So I think overall, one should expect top line growth to be somewhere around 9 to 10% or so for the leading IT names. And earnings growth should probably track the top line growth. So the sector looks to be fairly stable, reasonable visibility in terms of top line. Margin should also probably be stable. Don't expect margin improvement what we saw in the last calendar year. And it should do reasonably well, I think, in an environment where there will be some kind of a volatility in the market. I think this sector should provide stability to the portfolio. We are not expecting any great returns from the IT sector, but I think looking at the earnings stability over there and the fact that a lot of these companies are also having good cash flows, doing buybacks, I think the sector should do reasonably well. Return should be more moderate over there. Also, rupee, we have seen some appreciation in the rupee. Rupee has depreciated recently, but rupee should be range bound. So we are not expecting any kind of a negative or positive impact because of rupee going forward, at least in this calendar year. So we are neutral on the sector, looking at more as a defensive rather than generating any great returns from here on.
Okay, the stock of the moment, by the way, is Indiabulls Housing Finance. It's just seeing a huge buying interest first thing in the morning. The big green bar on that stock. Just pull out that intraday chart on Indiabulls Housing. About 2.5% higher is what you have on the stock. I think there were some shorts perhaps yesterday, that they might be getting covered, not just on Indiabulls Housing, but a couple of other housing finance companies as well. But that one is looking quite interesting. Mahesh, hi, good morning. Your thoughts on NBFCs, housing finance in particular?
So NBFCs have come out of the initial scare in terms of liquidity. We've seen liquidity coming back into the system. But clearly, I think this quarter and the next quarter, you should see considerable slowdown in terms of the loan growth. So that, I think, especially in some of these housing companies, I'm not talking about the tier 1, tier 2, but the other housing companies which have faced challenges on the liability side. So there's been some kind of a sell down in terms of the book, and that will get reflected in terms of the overall loan growth. Also, the cost of funds have gone up. We've seen the spreads for AA kind of corporates go up almost 200 basis points. And that should impact in terms of margins for some of these companies, though some of the housing finance companies have also increased the lending rates. But beyond a point, I don't think it is sustainable because it's a highly competitive market. So I think again, in the housing finance companies, clearly the top tier, the leaders, which would have much better ability really to raise funds, should be able to take advantage of the situation and probably increase market share and maintain their overall top line growth. The smaller players or the tier 2 players would find a bit challenging in terms of growth and also some kind of margin pressure over there. So I think that differentiation would clearly be there in the marketplace, and it's what we are seeing in terms of the de-rating of multiples for the NBFC sector. But I think by March end, we expect the liquidity situation should kind of normalize, And that's where one can expect some of these companies to again start to really raise liabilities and then continue with their growth going forward.
Okay, well, for now, the market is picking up some pace. So the Nifty is back above the 10,900 mark, negotiating that level quite well. The mid-caps, in fact, are picking up some more, so up about 100 odd points. So, you know, what we saw from yesterday, Anuj, there is definitely some follow-through buying.
No, I think there's some follow-through buying now for sure, Sonia, sustaining above 10,900. You know, I would still want to say 30 points. You know, perhaps the big trade is still not there. You would still want to see some more evidence. But I think if it sustains about 10,900 for a reasonable period of time, there could be some covering. I think what's really helping today is Bank Nifty, because yesterday it consolidated a bit. Today, I think you're seeing banks move up. So that's helping the market right now.
Okay. In fact, for the rest of the show, my colleague Rima Tendulkar also joins in. Hi, Rima. Morning.
Hi, Sonia. Good morning. So let's continue our conversation with Mahesh. Mahesh, what about the auto sector? You know, you've seen names like a Maruti correct, more than 25-30% from its peak. Eicher Motors, Tata Motors have seen significant or a very sharp correction. Is the sell-off a bit exaggerated right now? How would you approach it?
So auto sector this quarter is going to be fairly weak. That's what it's looking from the volume numbers, what we have seen in the month of November and December. Clearly, the festive season hasn't been that great. There has been piling of inventory, and we've seen as a result the actual sales, the primary sales have been pretty low. And it's a bit surprising, I think, the way the volume numbers have come off. But I think probably do with the kind of tight liquidity which we had. NBFC funding was not available easily. Cost push which was there, which increased the prices. But I think some of these things are kind of easing off. Even petrol prices, which were high in the month of September, October, have also come off. And I think overall consumption, I think the push in terms of pre-elections, we normally see spending at the ground level, money at the hands of the consumer. So I think the demand should pick up with a, say, lag another 3 months down the line. So the correction, I think, in the sector is in line with the downgrade in earnings, what we have seen in the auto sector. And also a margin pressure across, because in this kind of environment, difficult to pass on the cost increases. So I think post the correction in the prices, both in the four-wheelers and two-wheelers, stocks are looking fairly attractive. But I think visibility on earnings, volume growth is still some time away. So I think the stocks could probably languish for some time, but could be a good opportunity to look at them, because I think over a medium term, longer term, I think auto volume numbers should again come back to around 9 to 10% in that range. And that's where I think the stock will start to again outperform.
Okay, fair enough. By the way, there are a couple of stocks which are now seeing a bit of a breakout. One is IndusInd Bank. After a long time, after a consistent underperformer, but today there's a bit of a buying interest in the stock. Just see that one now moving in the green. I think the one that really stands out in the IT pack is NIIT Tech once again. So perhaps that KPIT money is moving to the likes of NIIT Tech, the ones where the market is expecting the numbers should be quite good compared to the likes of KPIT. So that one stands out. But IndusInd Bank is seeing a bit of a breakout, and that's helping the Bank Nifty right now. Mahesh, what about the key risk for this market? Is it crude? Is it something else? Is it politics?
So the risks to the market, again, on the global front, again, we've been expecting that the rate hikes in US won't be as spectacular. In fact, people are talking about a pause. So that should be good. But if at all we see faster rate hikes, then I think that could be bad from a global macro perspective in terms of flows, and that could impact our markets. But I think, crude oil can be a risk. I think we've seen that, when crude touched around $80 plus, it created a serious pressure on external front. Rupee depreciated, CAD went up. So that clearly remains a risk. But I think the chances of crude oil prices going up, say beyond 70, 75 looks slim at this point in time, because we've seen enough capacity, spare capacity, which Saudi Arabia has demonstrated, which can come back into the market. But that remains one of the factors, because we're still slightly vulnerable on the external front if that happens. Obviously, we'll talk about elections around the corner, but I don't think that should really be a big risk from market perspective, because I think the big reforms, okay, which were supposed to be done, I think that have already been done. So any new government which comes in will probably chug along with that. And I think if the overall momentum in the economy and earnings is fairly decent, okay, in the next couple of quarters, I think that should take the market higher. I mean, they could lead to some volatility around the elections, but we've seen that post the elections, I think you could see again stability coming back and liquidity also coming back into the market. So I think, earnings is one kind of a joker in the pack. Market is expecting very strong earnings growth in FY20, and this quarter is going to be a bit weak. So to what extent we see downgrade to earnings going forward is something which we monitorable in terms of to expect really to where the markets can scale newer heights and in the medium term.
Mahesh, where do you stand on Z Entertainment? The market was worried about a disruption by OTT players, but the numbers look quite good.
So the disruption coming in from, say, OTT players or other online advertising is something which is going to happen over a medium to long-term perspective. It's not going to materially impact the earnings in the near term, and that concern has been reflected in terms of the de-rating of multiples what we have seen for the media companies. I think in the interim, I think companies which are being able to really have a strategy to have have a strong footing on the traditional media, as well as making investments into OTT platforms, would be able to hedge their risks going forward, and I think Z has been doing that. But I think we have seen the advertising growth has been fairly strong because a lot of the consumer companies have been reporting good numbers, and the spend on media has been strong for the last 2 quarters. And I think that should benefit a lot of the media companies in this quarter, and that's what we've seen in Z numbers in this quarter.
Okay, Mahesh, thank you very much for your time this morning. That's the word coming in from Birla. For the market still holding up with a gain of about 140 points in the Sensex. The Nifty, in fact, has seen nearly a 200-point rally in a span of 2 trading sessions. The stock which is on our radar right now is MCX. It's seen a healthy growth in its trading activity, fueled by a sharp rise in energy trades and strong bullion activity. Here is more from Murugang P. Paranspe, the MD and CEO, on the outlook going ahead.
Last quarter, both crude and gold did specifically quite good for us. Crude was up more than 20%. Gold also was up pretty good, in double digits. Gold has got a lot of sentimental value for MCX. We've been with that contract for a long time. It's a flagship contract, and the impact that we saw post demonetization is definitely now coming off. And I think that's the most encouraging sign we took from last quarter's numbers, that gold seems to be coming back in terms of its volumes. Of course, crude was a great contributor, and I think these two will continue to be the contributors for the 4th quarter numbers as well. In terms of the next quarter, I think there are a couple of things which we are expecting. One, in terms of our product portfolio, we want to expand in both the energy and the non-ferrous space and the ferrous space, where we are looking to increase at least 1 contract each in the next quarter. I think in terms of a completely new product, I think we are very hopeful that index trading will come in definitely in the next quarter. Since last year, we have not really raised the issue of CTT. We understand the rationale at which it was introduced. We also understand why it is difficult for the policymakers to move away from a tax like the CTT. However, we believe that there's a genuine demand from the members, which is to restore the Section 88E benefit, and I think that's something which we are hopeful will happen during the budget process. In addition to that, I think at the last budget, the government had announced the initiative around launching of a spot gold exchange. We are very hopeful that whatever other policy measures need to be taken to get that to fruition will happen in the next couple of months.